Good morning, traders. Thank you for joining us today for Game Edge Pre-Market Prep on Thursday, July 31st. As always, here at Game Edge, we'll cover our three pillars: sentiment, structure, and trend. Then we'll look at our current trading plan for today, as well as go over any individual single stocks that anybody wants to cover. So we'll start out, let's jump right into it. We're looking at our market trend model, obviously, which is based on the tick index. Buying versus selling within the overall market is a quick takeaway. The key area that we like to look at for intraday is this bolded white line. This is our instantaneous or intraday CT or cumulative tick. Yesterday we saw that traversing down below the shorter term moving averages that we provide for momentum within this overall time frame and time structure. So again, as that traversed to the downside, obviously more selling was occurring within the overall market than buying, indicating obviously sellers were trying to take control. And then we saw the price drop in confluence there with the selling occurring. If you look up here at our breadth indicators, new highs versus new lows, they started to, new highs were outpacing new lows for the day, but then started to come closer together, obviously indicating more stocks are being sold into the afternoon. And then our filtered cumulative tick, plus 1,000, minus 1,000 block orders, institutional and larger market participants really started traversing to the downside, obviously indicating that institutions and larger market participants were selling into the afternoon, obviously post FOMC. You can jump back and take a look at our FOMC live session that we did yesterday, pointing out key levels as we headed into the press conference at 2:30, and then how we ended the day. And then our cumulative tick obviously finished below the zero line also, which is sort of a cautionary, even though we're gapping up extremely large this morning. So again, we'll watch this as the day progresses. Obviously, if you're a bull, you want to see this bolded white CT turn back above these shorter term moving averages very rapidly. One key takeaway is on this, as well as our other tick indicator, we did close within the colored ribbon. This would turn off one of our indications for our mechanical portfolio, which is our P-Trans to PX portfolio. You can search X extensive post about that, and then I'll talk about our website here at the end. But the P2P portfolio outperforms SPY and SPX pretty dramatically, so you can check out those posts. But again, this would turn off our mechanical portfolio from entering positions at the open today. So we'll watch this for a recovery to see if our mechanical portfolio turns back on. So again, cautionary into the afternoon yesterday. Even with a significant gap up this morning, we'll be watching how market participants open and indicate throughout the day if there's more buying versus selling. Jumping into the SPXA, we separate the SPXA from the SPXP. This gives us a larger institutional positioning. Obviously, these contracts here via the expiries turned on over here do not turn over as rapidly as the SPXP, which are 0DT, as well as daily and weekly expiries. So quick takeaway here, call dominated above and below spot price. We see 64.45, 64.50 is the line in the sand, the transition area on the SPXA, and then we see 6,500 up here. Obviously, that would be the area that we'd be watching to the upside for call speculation, and then traversing up there and possible stalling area. So again, quick takeaway, call dominated above and below spot price. Really no change here, no fear from institutions or larger market participants with anything that happened yesterday or heading out into the future. So pretty much steady as it goes with the cruise ship longer term expiries and larger institutional positioning. Jumping in the SPXP, you'll notice via the expiries turned on over here by the purple tiles. These are obviously 0DT as well as daily and weekly expiries. Quick takeaway, call dominated above and below spot price. We did close within the overall transition area yesterday, but obviously we're gapping up this morning. Implied open is around 64.15 to 64.20. This is really close to a COTMC area. That's a proprietary area here at Game Edge, where historically we've seen out of the money calls go in the money, and we see some pausing or stalling or actually monetization into that area. If we're above 64.15, 64.20, we think 64.50 to the upside would be that next level. We'll cover all this on our 0DT trading plan here in a few minutes, and then most likely up towards 64.75, 64.80 would be that first large area that we'd see some overall stalling, obviously right below the 6,500. And then we have the JPM into the money short call strike there, which could be an area that we traverse up to. As you see COI up here at 6,500, which is the highest call open interest. To the downside, you see the transition areas here, obviously staying above those would be more bullish. Below those would be a little bit more bearish and cautionary, and that could pull us back down towards the 6,300 level. 6,400 level, obviously significant round number, psychological, Livermore level to stay above. Very supportive within the overall option structure via charm and in the money calls if we stay above that level via all expiries. And you see the overall net GEX by expiration for this Friday. Moving on to the SPXP GEX ratio, obviously we saw a significant jump in the GEX ratio. We have forced spot price at 64.19 with this tool. So basically that's saying we're going to capture a significant amount of out of the money calls will become in the money, forcing this ratio higher. This is based on a put call ratio, but we add a time component, which is gamma. And that gives us a shorter duration overall look, which keeps us on the right side of the market. So again, we'll see how this plays out today, but obviously spot price was down yesterday. But if we force spot price to the open today, a very bullish looking structure for the GEX ratio as we capture all those out of the money calls become in the money as spot price moves up. SPXP delta balance, same look here. We are watching that zero line. That's historically an area where we like to stay above. If you are a bull or if you're a bear, you want to see these left-hand plane and right-hand plane dotted lines go below that. So we're just separating above and below spot price, which is the right-hand plane is the green dotted line above spot price, indicating call speculation. Left-hand plane in the money calls below spot price. You see on out in time, delta balance stays at 1. We're staying above 0, so projected expiries further out in time are still bullish with the overall SPX positioning and structure. This overall out of the money call speculation with a negative slope is what we'll continue to watch day over day. If this starts dropping below 0, then obviously it would be a little bit more cautionary for upside speculation. That may not change the downside supportive type action of in the money calls, but it would just change the upside possibility speculation of out of the money calls, obviously from speculators and market participants speculating to the upside. And as we add out of the money calls, that's obviously positive delta going into the overall structure. And then market makers and dealers have to hedge that overall out of the money call speculation by buying obviously the underlying SPX or other entities within the overall structure. So again, we'll be watching this. We'd like to see this turn back to the upside. Again, indicating out of the money call speculation. This is spot price sensitive, so obviously with the gap up, we may be capturing more out of the money calls and they become in the money. And as always here at Game Edge, our key component is we say moneyness matters. So that is the moneyness factor of the overall structure. What is out of the money becomes in the money, and then obviously vice versa. And how does that affect the overall price as well as the option structure and positioning? And that helps us determine our overall game plan for the day. Moving on, the SPXP 0 DTE, call dominated above and below spot price is your key takeaway. You see us gapping up into this overall area overhead. Obviously, all these out of the money calls will be coming in the money, so those will become supportive under price. But you do see these in the money puts above us, and then the lack of out of the money call speculation via this graphic at the open. And that's what I was discussing, is how much out of the money call speculation do we have to the upside that will continue to drive price. And that will be the key factor heading into today. And how will we look at that? We'll look at our vol M command as well as our vol U and vol D command. That's our intraday volumetrics. You've seen us post that. You can go back and search any of that. And then I'll post a bout of our education here at the end. It is free, and you can also sign up for that and understand our tools. But again, we'll have to have out of the money speculation to continue to drive price higher even with this gap up. So that will be key. Pulling back down into the 6,400 at the open, if we see some profit taking from those overnight risk taker call holders, that would be the key area to hold, key component or key SPX structure area first. And then if we get below 6,400, we'd be watching these transition areas for a level of supportive type action on any pullback. Again, these are call dominated, and we'll have in the money calls below us that will continue to be supportive. And then we'll drop into the drunken sailor range. If we do that, obviously this would be extreme choppiness area, and low exposure, so will be driven by intraday volumetrics only. So opening and closing of contracts via the single expiry or 0DT today. And then below 64.50, we'd be a little more cautionary, obviously below the drunken sailor range. And then we could lead to a little bit more downward type push action towards 63.25, and then 6,300 down here will be very supportive if we're above those levels. So again, key areas 6,400 transition area. Obviously, we always discuss being above transition area is more bullish, call dominated positive gamma area. Within the overall transition and drunken sailor range, very choppy. And then below drunken sailor range, we become a little bit more cautionary. So again, pushing to the upside most likely will be difficult, again, unless we see that out of the money call speculation, at least up towards 64.50. That would be our first stalling area and the largest gradient that we're looking at. Moving on to the SPX 0DT, this is just a different outlook or a different look of the with the different gradients that I've put on here. So yellow area here, you can pause your player and save this. Make sure you mark these areas on your chart. So yellow gradient here gives us our choppiness area below drunken sailor range, cautionary, and then above drunken sailor range, we're bullish up towards 6,400 and then 64.25, right around that COTMC area where we may be opening. Moving on to net stat command, this is the highest sensitivity areas or levels we'll be watching today. We've discussed the 64.30 level, right-hand plane strike. Obviously, that's 64.25, 64.30. To the downside, we see supportive type action. We have a significant amount of obviously in money calls. We've forced spot price here, so we've captured all those out of the money calls that are now in the money. Will continue to be supportive. And then net charm 6,400, large area in the money calls. Those will be supportive as long as we're above that key area. And then 6,500, obviously out of the money calls. Those are most likely far in the distance and not really achievable or attainable today. So we'll watch that net stat to see if that changes intraday, as our automated channels run this every 5 minutes for our members. And then gamma, obviously highest sensitivity areas, same as 6,400 and 6,500. And then Vanna, if we see that change in volatility today, how that could affect the overall price movement through the structure. One real quick note, and then we'll go to our trading plan for today. Come join us, gameedge.us, 14-day free trial, all the tools turned on. Even if you don't come and join us in the Discord, make sure you check out our free courses. The Gamma Edge Fast Pass is our flagship education course that we just completed. Significant amount of man hours went into putting this together for all traders. Again, this basically just gives us the exact tools that we use for our trading plans, as well as our methodology and some other key education about the SPX option structure. And then we have other free courses down here. School of Options. This is kind of like a master's, bachelor's program that you can go through with tests and questions. Again, all free there, as well as the mental side of trading free course. You can sign up for all those. But we encourage everybody to come join us at Game Edge and our Discord. Significant community of traders that are helping each other become profitable and get up to speed very rapidly, and dispelling the myths and rumors around Gamma, Delta, Vanna, and Charm within the overall SPX option structure. So moving on to the game plan for today, I pretty much covered it via 0DTE. I just want to do a quick look back from our trading plan yesterday and how price traversed our key levels. Really, we held that bottom of the drunken sailor range and transition level very well all day. So even if you weren't trading into FOMC, you had a good handle on pretty much what was going on. And then once we lost that transition level in the bottom of the drunken sailor range, we see these large dealer adjustment bars that we speak about. And the overall was happening under the option structure with hedging, as we see the out of the money put speculation ramped up very rapidly, and then what has to occur mechanically for the hedging and then driving price lower. And then we came right down to both of our proprietary levels here at Game Edge, which is COTMP, where we see out of the money puts go in the money, and we see monetization towards the end of the day, and obviously the in trans level held very well as we talk about into these levels, and then rapidly right back up towards our 0GEX level. So it's amazing how these levels continue to work, give us an overall trading plan that is very systematic and mechanical, and helps us understand how to manage risks throughout the day. So heading into today, it looks like we're going to open around the 64, 17, 64, 20 level. I've drawn the drunken sailor range for today. And our transition levels, obviously, we're gapping up significantly above that. So we'll be watching the top of the drunken sailor range today, as well as transition levels, and as well as the highs from yesterday. If you're a TA trader or TA analysis, obviously those will be important also. And then with that 6,400 level I've drawn with a horizontal line here, that will be a key area. And then we'll get our updated TradingView script after the open, so we'll be able to plop those levels on there. Or you can go back and you can download the 0DTE SPX TradingView levels this morning, or you can go back to our 0DTE web app and you can mark these levels on your chart manually if you wish to do that. But it's very easy to jump in our Discord, download the Thinkorswim or TradingView Game Edge levels and plop them on your chart and have a good overall area and trading plan for our key sensitivity levels. So thanks everybody for joining us. If anybody wants to go over any single stocks or has any questions about our trading plan for today, as well as how we had our outlook for yesterday heading into FOMC, just let us know and I'd be happy to cover those. So thanks again everybody for joining us. Again, come check us out at gameedge.us and follow us on X and YouTube, and like and subscribe and click that notification button. You'll be notified anytime we go live or post any content. So, all right, I'll hang around for another minute. And again, thanks everybody for joining us. Yeah, Tesla. Yeah, we'll take a look at that. Tesla in our intraday analysis yesterday was staying below, I want to say it was 320 was the peak X level. Yeah, everybody wants to see Tesla, huh? Okay. Yeah, I'm staying below 320, which was our peak X level. Actually, so all expiries turned on, call dominated, above and below spot price. So very supportive type action. We're above transition. Obviously, that's bullish. We see peak X up here at 325 on this structure, and then I'll take a look at Friday's option structure. But 325 would be the area to the upside. I'd first be watching maybe for some stalling or monetization. But you see COTMC up here all the way up at 360 or 360. On all expiry. So let's take a look at shorter dated. So 8-1 turned on with this purple tile, obviously heading into Friday. Call dominated, above and below spot price. You see COI up here at 330. That's the highest call open interest speculation, but you see PGX at 325. Historically, PGX is that area where you might see some monetization moving up via the structure, and then obviously COTMC is all the way up there at 360, but 325 would be the first area I'd look for some stalling, and we could run the scripts after the open and see what it looks like. But staying above transition is bullish also. So if you're dropping within transition, it's a little bit more uncertainty and most likely back and forth type action. Below transition, I'd be looking obviously for maybe a move down towards 305. That's the index level. But we have a significant amount of in-the-money calls below us that will continue to be supportive of on Tesla. So still bullish across the board. And then if you go to 8.8, obviously see PGX ramp up there to 340, and you see COI go up to 330. So again, structure continues to advance. That's what's nice about our web app. You can click through these tiles. COI stays at 330, but then PGX goes up to 340. So again, call speculation to the upside, live and well, and continues. You do see transition widen out a little bit. That's a little bit more uncertainty, but again, call speculation maintaining the overall structure. So, all right, thanks everybody for joining us, and everybody make it a